Hey everybody, hope this finds you doing well. This is Danelle here at Networkchain. Today we are going to talk about what's going on in the macroeconomic environment. It's very important that we understand what's happening in the macro because it definitely can dictate what happens in the markets, not only in cryptocurrency, but in the traditional finance world, including equities as well. As you can see here, Bitcoin is currently trading at $54,800. It's down 4.56% over the last 7 days. It actually had a pretty volatile week last week. You can see here that Bitcoin actually was at around 59,000 earlier in the part of the week, and then it went all the way down to under 53,000, breaching that level, going down to about 52.5 or so. So it basically did a 10% drop over the 6 days or so, or really 4 days, from September 2nd to September 6th. Friday was when we saw the jobs report come out. We'll discuss that in a moment. Let's go back to the rest of the crypto market update. You can see Ethereum trading at $2,300, down nearly 5%. BNB at $500, down 1.5%. Solana up back to about $130, down just under 1%. XRP still trading in that 50 to 55 cent range, down 3.5%. Dogecoin under 10 cents, down, or I should say up, almost 1%. Tron at number 9, and Toncoin back into the top 10 at $4.91, down 5.47%. So if we go back to the Bitcoin chart, you can see here Bitcoin has been trending downward over the past week, but if we take a zoom out and look over the past year, we're still way up above where we started at the beginning of the year, but we are still trending downwards currently, but we are seeing that there's a possibility of a reversal towards the end of the year as we look at what the Federal Reserve in the United States is getting ready to do. It looks more and more likely that they will begin cutting the federal funds rate, which is the interest rate, sometime this month in September. So if we look here at the fear and greed index, which is a barometer of what the sentiment is in the market, you can see here that we're currently at the fear at 39 out of 100, which would be extreme greed. And so the markets are still a little bit shaken. We had a jobs report that recently came out on Friday, and we didn't add in the United States as many jobs as many analysts has expected. So you can see here another benchmark indicator is looking at the S&P 500, which is the top 500 companies in the United States. And you can see here that there has been a dip over the past several weeks. And you can see here they are now trending towards that 125-day moving average. And the last time that we hit that mark was in August, when the Japanese carry trade fear had come out. And so we are looking at potentially hitting that line once again. Could we bounce back up come September? That's a possibility, or I should say come October. That's definitely a possibility. If we go back to the market trends over several years, generally September, even sometimes October, can be quite volatile, and then a lot of times you'll see some momentum going into the end of the year, especially in an election year in the United States, when the elections will be taking place in November of this year. So if we look at the jobs reports that you can see here, here's an article from CoinDesk. It talks about when Bitcoin pumped and then dumped below 54K as the job report came out on Friday of last week. You can see here that the Friday's job report quickly reversed into volatile trading, sending Bitcoin, the largest cryptocurrency, to its lowest in a month, which was basically back in August. And you can see Bitcoin had jumped up to 57,000 following the report, only to erase the gain and tumble below 54,000. Also, other altcoins slid down as well, including Ethereum, Solana, Ripple, and Cardano. So if we look here at the 12-month inflation rate, one of the indicators that people look at is the consumer price index. We've talked about this in our previous videos. You can see now that in order to combat inflation, the Federal Reserve had been raising interest rates, and you can see here that that was during a time when inflation had gone all the way up to over 9%. So now that they have gotten it down to under 3%. It's currently at 2.9%. We'll get some numbers soon regarding the August numbers, but or at least their spoken target was 2%. It didn't quite get to 2%, but since it has a 2 in front of it, it looks like they are going to be looking to cut those interest rates, in part because of that jobs report. If you look here at the U.S. unemployment rate, it is starting to ease back up. If you see here, over the past year, it was in the 3% range, just under 4%, but now it is climbing above 4%, currently at that 4.2% range. And here you can find some information about what the U.S. unemployment rate measures. And basically, it's the labor force. There's a certain age range, I believe, from 16 years old and up. It doesn't include veterans and things of that nature. But it is a indicator that the Federal Reserve looks at when it comes up with monetary policy. Speaking of monetary policy, we also talked about M2, which is the supply of money that is out circulating in supply. And you can see here that since the pandemic of 2020, the money supply was around $15.4 trillion. And then basically half of the money supply had been printed over the last several years. And we're reaching all-time highs once again. We are at around $21 trillion, actually a little bit more, I believe, now going into September. So that is another thing that is indicator that traders and investors look at, because the more money that is printed, that goes into higher inflation. And so with higher inflation and with more money being printed, that can then turn investors into risk on assets, especially if the Federal Reserve does decide to drop down those interest rates. So it still remains to be seen. We could potentially still fall into a recession. So these type of factors are very important when we're considering investing and into what assets we invest into. Here in the United States, the national debt continues to rise. We're currently at $35 trillion, and it continues to go up each minute, each moment, each month, each day. And so you can see the growing national debt. You can see the trend here and look at the chart over the last 10 years. It was around $10 trillion, and it has basically tripled in the last 20 years since 2003. So the U.S. national debt isn't going down. Many people believe it would be smart of the United States to consider something like what El Salvador has done, which is start a strategic Bitcoin reserve, because Bitcoin is a finite supply and there will never be more than 21 million Bitcoin. There is no risk of inflation like you see with the United States and with other fiat currencies. So that remains to be seen if that will one day take place, where Bitcoin could be on the reserves for a country like the United States. You can see here, as we mentioned, the federal funds rate is currently above 5%, between that 5.25 and 5.5%. So there's a possibility it will start to go back down, because you can see it hasn't been this high. The last time was in 2007 or so. So around that market crash of 2007, 2008. So we shall see if it will get back down to these lower levels like we had back in pandemic times. We're not sure if it'll get down that low, but if that is the case, then you could definitely see a possibility that the S&P 500 and other risk-on assets could go up in price over the next several months going into 2025. So we just wanted to give you a overview of what's happening in the macro environment. It definitely can affect the way that the crypto markets move. So it's definitely something that you want to keep an eye on, particularly if you're considering investing and trading into the cryptocurrency market. Of course, we will continue to keep you posted not only on IG, but as well as X nearly every day. And of course, we'll be here every week on YouTube. We really appreciate you watching. Thank you so much. We look forward to linking up with you on the Networkchain. Take care. Bye-bye.